Hey traders, in last week's video, I walked you through a hot streak I was having in the market and took you through a few of the trades I entered, explaining why I got involved and how exactly I did so. At the very end of the video, I remember saying that although I had a hot streak, it was very important that next week you got to erase all of that. You got to reset at neutral because you don't want to go into the markets overconfident and lose everything that you earned. Well, that didn't happen. And we hit a hot streak once again this week in the live room and this week in the syndicate, erasing all of September's losses in the last 2 weeks. So in today's video, what I'm going to do is, again, I'm going to walk you through some of the trades that I put out there, and I'm going to attach a lesson to each one. So sit back, relax, and enjoy this week's weekend review video. Okay, traders, first and foremost, thank you once again for joining me for my weekend review video. I got a massive amount of compliments about last week's video that you guys really enjoyed it. So hopefully I can meet that standard once again. If you are new, when you're done with this video, please go back and watch the hundreds and hundreds of free videos that I have on this YouTube page. And if you haven't done so already, make sure you subscribe to the site. That way you get updated whenever I put a video out. Now, I talked in the beginning about 3 lessons or 3 keys to success I want to focus on in today's video. And those 3 keys to success are, I had to write it down, are structure leaves clues, take advantage of the opportunity when it arises, and keep it simple. And what I'm going to do is I'm going to walk you through some of the trades that we had in the syndicate, some of the trades that we had in the live room. And I'm going to flash you back and forth between the past and the present. So I'll take you back to a recording from one of our syndicate videos, show you exactly what I sent over to the syndicate members, explaining what exactly I was looking at, and then take a look at, well, how that trade played out. Now, again, I'm cutting and pasting this thing up because I want to keep these videos to 25 minutes. And typically a syndicate video in itself is maybe 15 to 20 minutes long. And, well, the live room footage is about 3 hours a day. So I can't show you all of it, but hopefully I can give you guys enough that you can grab some educational bits from it. So the first key to success I want to talk about is structure leaves clues. And this was a trade on the pound dollar. It was a structure-based trade combined with an advanced pattern. Combined with an advanced pattern that I typically don't trade, but in this scenario, because it completed at a specific point, I was able to get involved with it. I was able to put out that trading idea. And for those traders that took it and got filled on it, they benefited pretty good from it. So here's a recorded session from Tuesday's syndicate video breaking down the pound dollar butterfly pattern. Another advanced pattern, another one from our live room this morning. This one gets a little more intense. Now this is going to be a butterfly pattern, but probably not the butterfly pattern you guys are used to trading. Now, what I'm doing on a daily is looking left, structure leaves clues. I believe Jason was looking at this same area. If I draw a line here at our lowest support area within this zone, you can see this little cluster, this area of consolidation, you can say. If I draw a straight horizontal line at that level, that's going to put our structure level, the lowest point of our support level, down at 58.55. So remember that number, 58.55. Again, technically the butterfly completes at the 127 extension, but it's a whole zone you have to mess with. I just want the very edge of that zone. I'm then going to take my Fibonacci inversion from my A leg back to my X leg, and I'm going to look for the 127 extension of that X to A move, or that A to X move, and I'm going to look for that to line up right with my 1618 extension from A to B. And you can see that lines up at the exact same place, about 58.75, 58.75, 58.70, about the same thing on a 4-hour chart. So I'm looking for a butterfly pattern completion down here. Now, typically I don't like butterfly patterns because they complete below X. X represents our structure level, our safety, the area where we're supposed to put stops off after. And well, when it completes beyond there, that's a lower low, lower close, lower low, lower close makes me immediately think trend continuation in that direction. So why would I want to get short, especially if I have no place to put stops? However, in this instance, we do have stops because remember, we drew in that daily structure level, that daily support level right at our red line. So if you're going to take this butterfly pattern, make sure stops are beneath this 58, 55 area. At least you're going to have a little bit of support down there, an area to use as protection instead of just being out here in no man's land. So you can take that aggressively like you would any advanced pattern, or, if you want to be more conservative. All right, so I hope you guys enjoyed that. I actually forgot, I also posted this pattern over to TradingView, www.tradingview.com. I don't post too much there as, again, my priority is my syndicate members, but every once in a while, maybe once a week, twice a week, I'll shoot something over there and, I've gotten requests to do so. So I try to keep everyone happy. It's a downfall of mine. They say you can't please everyone, but that doesn't stop me from trying. But anyway, you can kind of see how this trade played off. On the left-hand screen is the daily chart we talked about. On the right side of the screen is the hourly chart, or the 240 chart, 4-hour chart. And if I click this button, it will show you exactly what this trade did after we bounced off this level. Check this out. Bang. Pain-free, moving up, easily hitting first targets around that circle area around the B leg retracement in the 382, which is at the 160 even handle, and still rallying up as we speak right now. So a pretty darn good trade there. I know a few traders in my live room that made some pretty significant profits off of that. Now, the next trade I want to talk about is the euro is a euro yen trade, and the lesson with this is take advantage of the opportunity. And before I get into that trade, there was another euro yen trade earlier in the week. I didn't put this one into the syndicate. That's gold. Look at that. Gold rally too. Bang. I tell you what, when you're on fire, you're on fire. When you are on fire, you are on fire. But let's get to euro yen if I can find it. There we go. Like I said, when you're on fire, you're on fire. We had this earlier in the week, a bat pattern and a butterfly pattern. Strange because I rarely trade butterfly patterns, but we got two valid ones in the same week. And again, this one the rest is history. You can see it rolled straight down before eventually retracing back up. But the trade I want to talk about next is on euro yen. And the lesson with this is take advantage of the opportunity. And we had a good conversation today in the live room about how, although I'm a counter trend trader, and many of the traders that I teach in my 12-week transformation course are counter trend traders, we can actually use these counter trend tactics to get involved in trend continuation trades. And that was kind of a wow moment for many of the people in the live room. They thought we can only look for double bottoms, only look for, outside returns, reversals in the market. But we can take those same counter trend techniques, even something like ABCD patterns, advanced patterns. Those are all counter trend techniques. Using our top-down analysis, we can use those same techniques to get into a continuation move in the market for those of you guys that like to trade the trend. So the euro yen is an example of that. Again, looking at the higher time frame, doing our IPDE, identify, predict, decide, execute, knowing which way the market should go, and then using the skill of structure analysis, of course, but using the skill of pattern identification, advanced pattern identification, and using that to get involved in that trend continuation move. Now, this particular trade didn't get filled. The pattern reversed 10 pips before the entry. But again, it's not the trade that matters. It's the lesson attached to it. Again, another one that starts off in the syndicate. And then we go over to some of the live room footage we had in today's session. Euro yen, you can see my X leg starting up at 36.53, X to A to B, coming up to my 618 retracement, a little deeper into that 618 zone, which is good. We've got down to 86 for our C leg, and we got our D completion up at 136.33. Now, what's good about this bat pattern is if you just look at structure, and if you guys watched the War Room meeting this morning with Jason, you'll see that we're in the ebbs and flows of structure. If we start off on, say, a daily chart here in gray, you'll see that we're in consolidation, but we do have a lower low, lower close under our previous support level, which is now resistance. Green has turned to red. So again, that lower low, lower close, even though we're consolidating, we haven't really broken out yet. When we see that, we think new structure low, we think trend continuation to that side. And even if we just do ebbs and flows on the chart, we have swing high to swing low, outside return. We've got basically some consolidation here, but you can see swing high to swing low, outside return. Swing high to swing low, outside return, swing high to swing low, and this bat pattern completion is actually to come right at our previous outside return. And what do we know about this? Well, if this trend is going to continue in this direction, this outside return level should not be violated. And again, it happens to be our X leg, so we know stops are going to be above there anyway, making it a perfect opportunity to hop on a bearish bat in a bearish trend. And for some of you, maybe even shooting for extended targets instead of shooting for simply that 3D2 and that 618. All right, so pretty cool. I'm still tracking this right here. This is the euro dollar yen trade. I know this is off topic. This is dollar yen trade we took this morning. Jason and I both took this around the same area, up about 57 pips right now. You can see I'm waiting for, we got a higher close, which means we should continue that direction. We're hitting the Asia session right now. We're actually right before the Asia session. The markets aren't doing anything. I would love to get this hit so I can sit back, produce this video, and watch some Thursday Night Football, without running back and forth to see if I have to roll stops or anything like that. But we're getting there. You never know. Now, the third and final lesson I want to share with you guys is this one's going to come on the pound Swiss. And the lesson with this is keep it simple. We talk about advanced patterns a lot. We talk about double tops, double bottoms, 26-18 trades, this type of candlestick formation, that type of candlestick formation. All that is fun, but at the end of the day, if you know the skill, if you know and you've mastered the skill of simply reading a price chart, simply being able to identify what a structure level is and which structure levels should be hit, what happens if it breaks below it, what happens if it holds, can get you in really, really good trading opportunities. And we had an example of this on the pound Swiss. This was a pair that I've been talking about for months. If I can get my words out. This was a pair I've been talking about for months in the live room, where I was talking about it at the higher level. We've simply fallen off a cliff going about probably 600 pips down. We went far down. But what I told the traders in this next video is, again, it's just using the ability to look at structure, saying, where are we going to see some relief at? Similar to the Aussie dollar trade we took last week. Where is the relief going to come at? When is the market going to lose steam? And where can I take advantage of a short opportunity? And what I mean a short opportunity, I don't mean literally a short trade, but I mean, looking for a brief retracement and a chance for me to gain some profit. So check out the pound Swissy. Pound Swiss. If you've been in the syndicate for a while now, probably about at least the beginning of the month, we talked about this level up here being a short area. I don't have enough data on this chart, but there was a structure level right up there. Let's bring it over on this one. Pound Swiss. Just in case you guys don't believe me, you can see I got some notes still on here from something. But we have a structure level. Let's go to a weekly. This will make it a little easier to see. We had a structure level looking left right up here that we were having trouble penetrating. You see my green crosshairs? We never got a break in and close above that. And as soon as we rejected that, I thought we would see a fall. And, well, what are we doing? Well, we're getting a retracement back in the previous structure. Again, if we just simply take our line tool, swing low to swing high, outside return, swing low to swing high. We've got our outside return right here. We've essentially fallen off a cliff for the entire month of October. You can see after initial fall off, a little retrace here. 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 straight days of bearish movement here, and it's only October 15th. You could also look on the RSI down here and see what? We're buried. We're down, and this is the daily chart. We're down at 7.8 on the RSI on the daily time frame. So let's go down to a 4-hour chart. What I'm trying to say there is I'm looking for some relief. There's got to be some relief. I always tell you guys, think like the other trader. If you were let's take an example. We have one of our traders in the live room, Bill, actually caught this entire move down, or the majority of the move down. So Bill's been a bear on this. If you're a bear from up here, where's the final place you're looking to take targets at? Just think about it. If we're structure-based traders, and don't be realistic. If you were in this trade, where would you take targets at? You would at least take some part of your position, if you're not clear already, some part of your position down in this area, right? This is a previous major structure area. The biggest one we have in a while, because the next one really comes down here. So you're looking to get some type of profits off the table there, right? So if you're selling, you've got to buy yourself out of these out of your position. There's going to be a lot of buying orders flooding into the market. When we see buying orders flooding in at a high pace, what are we going to do? We're going to get some type of relief. We're going to get some type of retracement. So that's what I would look for at this area. I would look for some type of consolidation, some type of entry reason down here, whether it be a higher high, higher close, a double bottom, 26.18, a 3-bar reversal, something in this area. We don't have it yet, but something in this area to look for a buy. I'm going to have very short stops down here. Stops only need to be below previous structure lows. Our support levels down at 49.73, so you can probably have them right below 49.50s. Not a bad stop loss at all, depending on where you get involved in that. Now, target taking is going to be a little difficult. We don't have a true structure level to aim for. If I'm just looking at structure, we've got our first area right here at about 50.91. We've got another area, probably our more powerful area, right up here about 51.69. Fibonacci confluence is going to put us at 52.03, so about 52 flat. This is the area that is going to be more important, in my opinion, for structure. This is a minor area. This is minor too, but this is an inside minor area. All right, guys, before I let you go, I have one more bonus lesson I want to share with you, and that's going to come on, really comes from an Aussie dollar trade we took today in the live room. A very good winner, hit about 65 pips. But the lesson is, everything we just talked about, it means nothing without discipline. We had a great conversation today. I always talk about, we always hear the numbers about 90% of traders fail. And I got the question today in the live room that said, Akil, if trading is simple and learning this stuff isn't that hard, if trading is simple, how come 90% of traders fail? And that's a very easy question to answer. Discipline. It's all up here. It's about the 6 inches that lie between your ears. It's discipline. It's trading psychology. You can have whatever system you want. You can have whatever strategy you want. If you're not disciplined enough to trade it day in and day out, it's not going to do anything for you. And when I mean trade it, that goes all the way from actually pushing the button to buy or sell to managing that trade correctly. I talked about my training course. It's a 12-week training course, so 3 months. I get through all of the structure-based stuff, all of the advanced pattern stuff, all of the strategy development stuff in the first month. So why is it a 3-month course? The rest is spent, it's money management, trade plan development, stuff like that. But the majority of the time in that training course is spent on discipline. It's spent on trading psychology, because I know that's the most crucial point. That's the most crucial part of helping a trader become successful. It really is the psychology, guys. I'm not playing. And that's one of the benefits, I would say, of my live room. This is starting to sound like a plug. I hate plugs, but that's one of the main benefits of my live room. It's not, I always tell people it's not a signal service, but the point is you get to sit there and you may be involved in the same trade as me, and you get to watch how a professional handles themselves while the market goes up, while the market goes down. And we had a great example of that on Aussie dollar today. We took a double bottom trade right before a Gartley pattern completion. The market immediately went straight up about 20 pips. And we came back down to about break even. We went up to about 40 pips, then came all the way back down to 20 pips. And well, just watch the tape and I'll show you. Aussie dollar is taking us for a ride. If you're watching it, we've come all the way up about 6 pips away from target one, and now we're getting sucked right back down. This is the emotional part of trading. This is when the market will mess with you and dare you to get scared out. How many of you guys, are any of you guys in this Aussie trade? Give me a yes if you're in this Aussie trade. For you guys that are in it, are you starting to get a little worried, nervous? We got some high wicked candles up here. Not at all. That's what I'm talking about. But this is tough. This is tough to see that we came this close to hitting targets. You were up 50, 60 pips? You were up 60 pips. And you know that we all think 60, we were up 60 pips, and then it spiked right back down. Most traders in this scenario, and again, it depends. I don't know where your guys' targets are at. But assuming your targets are right here, this is when most traders get scared out. They see it get so close up there. They spike back down. They say, oh, no, it's coming back down and missed it. I'm going to get out for 40 pips because it's better than a break-even trade, or it's better than losing money. And then when the trade hits, they're leaving 30 pips on the table. And if you're consistently doing that time in and time out, you're leaving 30 pips here, 20 pips there. You're leaving a lot of profit on the table. Can't do that. It feels good at the moment. It feels good when you put that money in your pocket. You're like, whew, I'm done. I got it out. I can't lose anymore. But remember, guys, our wins, these wins have to cover our losses. And leaving 30 pips on the table could be the difference between taking the next trade on Aussie that loses 30 pips and you being break even, than to being that trader that is still up 40 pips on 2 trades, on 1 win and 1 loss, because you took the full profit. That got the question earlier about if this trading stuff is so easy, why do 90% of traders fail? That is why 90% of traders fail. 90+% of traders fail. It's got nothing to do with the analysis. It's the psychology. It's being able to deal with this pain, this unknown, day in and day out. Not knowing what's going to happen. Having your money on the table and it being out of your control. That's why so many traders fail. All right, gang, so that's it for this week. Again, thank you once again for joining me. Every time you leave a comment, every time you hit that like button, every time you share it, and every time you subscribe, it helps me. This is a free video. I don't make any money off of it. No advertising, no embedded stuff. I just do it to give back. And believe it or not, some people still like to give back. So again, liking, subscribing, sharing, that just helps me spread the word, helps more people get involved, and makes me feel better about myself. Now, if we can only get dollar yen to get up about 20 more pips or 30 more pips, that would be good. But thank you once again. I will see you guys next week. I am heading to Dallas for the weekend to watch the Cowboys play the Giants. Hopefully we can continue our hot streak, as I'm a Cowboys fan, and I am pleasantly surprised with how this season is going. I still don't truly believe it, but we'll see. But until next time, traders, plan your trade, trade your plan, and good luck in the markets tomorrow.